Once it became a little bit more clear back in September that it looked like Trump was going to win the election, and of course with Robert Kennedy kind of taking over Health and Human Services, lots of concerns about what that would mean for insurance, the Affordable Care Act, the FDA, etc., have had a lot of selling pressure going on in healthcare stocks. Those stocks are really beaten up. There's going to be some decent opportunities. Not every stock in the sector, just don't go buy the whole sector, but there's going to be a really good opportunity in some of the stocks in the healthcare sector because of that. But okay, well, let's talk about what you need to know before the bell this morning. Market's sitting right on the 20-day moving average, exactly where you would kind of expect it right now. We're kind of holding that level of support, bounced off of it yesterday. This morning, we're going to make a little bit of a push higher. Again, we're just kind of flirting within this trading range, just slightly off of all-time highs. Now, we're still on a sell signal, been kind of working off some of that relative strength overbought condition. There's some more to go here over the next few days. So we could definitely see a bit of a sell-off this afternoon, maybe into Thursday or Friday, particularly if the Fed comes out a little bit more hawkish today. That's okay. That's all would be just kind of part of the setup to get the markets oversold enough to rally into year end. So, again, just as we talked about last week and this week, we said expect volatility, and that's exactly what you've gotten. So, it's just been a really kind of sloppy trading week, and that just is going to occur sometimes. But again, don't get too wrapped up into what's happening right now. There's some reasons this is happening. The trend of the market's been very good. We've had a very good year here. So, there's just not much of a reason of overall concern with the market right now, particularly heading into year end. But we kind of went through some other areas of the market yesterday, basic materials, energy, those areas are deeply oversold. Healthcare, the worst performer this year, kind of across the board over concerns about what the new administration may do in terms of healthcare reform, food, all those type of food, medications, etc. So some concerns about that. Now, typically, healthcare as a function tends to perform better after the election. So in pre-election year, so last year as we were going into the election, healthcare tends to underperform going into the election because they don't know what the new administration is going to do in regards to healthcare. Healthcare tends to perform better after the election. So if you take a look at healthcare, it is deeply oversold here. And again, just really kind of across the board has had a very big decline here, really ever since the beginning of December. Lots of selling pressure, but that's been going on all the way back to September. So once it became a little bit more clear back in September that it looked like Trump was going to win the election, and of course with Robert Kennedy kind of taking over Health and Human Services, lots of concerns about what that would mean for insurance, the Affordable Care Act, the FDA, etc., have had a lot of selling pressure going on in healthcare stocks. Those stocks are really beaten up. There's going to be some decent opportunities. Not every stock in the sector, just don't go buy the whole sector. But there's going to be a really good opportunity in some of the stocks in the healthcare sector because of that. And as we talked about yesterday, energy is going to be another one. Again, deeply oversold. We're going to have a fairly decent counter trend rally in energy stocks as well, probably once we get into the new year. So again, it's just, be careful bottom feeding. There's still a lot of pressure for various reasons in this sector, but you're getting oversold enough now that there's going to be some decent bounces in some of these areas like real estate, like staples, like healthcare, like energy that have been deeply oversold and could see a rotation out of some of the more high flyer stocks that we've seen as of late. But again, just one of those things you want to be cautious of. It's the timing of that move is always the difficult part. So probably, kind of the best way to approach this is just to wait and start to see that recovery and then buy into it once you start to see there's an actual recovery and a flow of funds into those areas. But that's what you need to know before the bell this morning.